I'm beginning to think some of you think money grows on trees. Hey, badass business owners, my name is Tammy, and I'm here to help you grow your business, but more importantly, grow those profits. And you're probably thinking to yourself, Tammy, no, I don't think that money grows on trees. But let me tell you, some of you act that way, even though you may not think that way. What am I talking about? Well, as you know, I do a lot of business coaching, and I also do bookkeeping for a lot of folks. Some of you are listening. Shout out to you guys. But here's the thing that I'm noticing a lot of, and I tend to notice it as it's happening, but I really notice it this time of year as we get towards the end of the year. And what that is the fact that people pull out all of the money out of their account on a regular basis, and they're spending it. So I'm not necessarily saying they're putting it in their pocket. Some people are. They're spending every dime their business makes, and they don't leave much money left in their accounts. But there's also folks that are running it pretty low for the most part because they're turning around and they're spending the money to reinvest back in the business or to buy other things. Or they're paying payroll and they don't cut their payroll even though their sales have come down. And once again, the account has basically nothing in it. But here's where the problem comes in, and that is taxes. We are about to get ready to close out this year. And for some of you, you are going to be shocked that you owe money. And then you're going to be mad that you owe money. Now, you're happy with the success. You're happy with all the money that you took, but you just don't understand why you have to pay taxes. Well, it is what it is. We have to pay taxes. And for most of you, you get some great discounts and some different things that happen with your taxes because you get to write off so many different things and all your expenses and your costs and this and that. But here's the thing, at the end of the day, it's not zero. Now, for some of you, it might be because of your high depreciation or maybe some other things. But what ends up happening is at some point it does catch up to you. And then what happens is you get slapped with this $5,000, $6,000, $7,000, whatever, for some of you even more, tax bill, and you haven't saved a dime. And this is where the problem comes in, is there's no savings whatsoever. There's no account that you're putting tax money into. You're not doing quarterly taxes. You're not doing any of that. And then what happens is you delay seeing the tax professional. And then when you do finally see the tax professional and they tell you you need this money, not only did you not save last year, while you're waiting and postponing into the last minute to pay in October, you didn't save any more for the taxes for last year, nor have you saved anything for the taxes this year. And you're scrambling and running around trying to figure out where are you going to pay those taxes. It's very important that you stop the madness and you start putting money away for these taxes on a regular basis. You need to take a certain percentage of your profits and put them away. You've heard me say this a million times. Your profit has 3 jobs. One of those jobs is taxes. The other one is to invest and pay debt, and the other one is to pay you. But for some of you, you pay the debt and then you pay you, and those are the only ones that you pay attention to. Occasionally, it'll be to reinvest in the business or to save in case something happens in the business. But for some of you, I would say probably if I look at all the different people that I help, I would probably say a third really set aside money for their taxes. The rest are kind of flying blind and just kind of willy-nilly and like, oh, I'll come up with the money. And if they've been in business for a few years and they've had some of those tax deductions or some of those things in the past that really brought that tax burden down, they think it's going to happen again. But then I've had people where they get caught all of a sudden because they've taken all the depreciation for everything they bought in the business in the first few years. They've used that to not pay any taxes. And then all of a sudden they get into year 3, 4, or 5, and they have this huge tax bill. A couple reasons. One, they've used up a big chunk of all those deductions. They've already done that, right? The next thing that ends up happening is their business has grown over those 3 to 5 years. So it's not just a simple $300, $400, a couple $1,000 tax bill. Now they're looking at a much larger tax bill because the business has also grown. And my challenge to you is this. I really need you to start thinking about a tax strategy to put money away. And I always encourage everybody to at least put 10%, 15, 20% into a high yield savings account to kind of just hold that money. You can attach it to your QuickBooks, you can watch it, you can use it, but it's not your backup savings. It's not your rainy day fund, and it's not for you to be able to just use because you get this whim that you want some more money and you want to take it out for you. You have to kind of change your mindset, if you will, into the way of thinking that it's not your money at all. This is money that is set aside for the government. It's not yours. And you may not need it all, but at least it's sitting over there, because if you do your business right, you're going to continue to grow, which means your tax bill is going to continue to grow as well. So if you keep money in it, you've already got a head start on the next year as well. Worst case scenario, and you decide that, hey, I'm going to close up the business, and after you pay your taxes, you might have some extra money in there for you. So it's never like gone, but it's money that's set aside, because there's going to be times and things that happen that you're not going to be able to set aside that money. You might have a month where you need every single dime because of something you're going to do within the business, or maybe life hits you really hard and you've got an emergency and you need to take more than you normally would. But at least if you've been setting aside the money for the taxes and you've got some left over from the previous years, you know that you've got some money there. For some people, you guys have to pay state tax as well. And for others, you have to pay the uses tax, the sales tax kind of a thing that's definitely not your money and you shouldn't be putting in your pocket. So you can have this account that just holds money for taxes for the government, whether it's through sales tax, state tax, federal tax, doesn't matter. It's a tax account. Put the money in the tax account. But I'm telling you, a lot of times when I am helping people and we're pulling up their stuff, whether it's for coaching or bookkeeping, it doesn't matter. One of the things that really stands out to me is the fact that there really is no plan for this tax piece. And it's probably the part we all hate the most about our business, is that we have to give money to the government. There's never a time that you're going to enjoy giving money to the government. But what is important is that you save for it, because it's not about if I like it or you like it or anybody else likes it. It's a fact of life. It must be paid. And, for some of you, it's your business plus your spouse's business. And in some cases, your business might be contributing the most to that tax bill, or it might be that your spouse's taxes are overpaid, so it helps cover it. Everybody has their own tax situation. So I totally get it that in some cases you may not have to have that because your business is smaller and the spouse's business helps offset it, or their W-2, whatever the case may be. But the important thing is that don't be surprised when you owe several $1,000s at tax time and you don't have any money and you're stressed out over it and you're freaking out because you did it to yourself by not saving the money along the way. And it's really, really important that you get in a habit that you just take that portion of that money. Start small. If you're not doing anything right now, take that 10%, 15%, and just put it in that account. You just go to your bank and you ask them. Worst case, you have a regular savings account. You're not going to make any money off of it. But for some of you, a lot of times they'll have a high yield savings account. It's not huge, but it's like, 3 to 4% right now. And I think it's like 3%. But at any given time, but at least you're making some money on your money while it's sitting there, right? And at the end of the month, you look and you see what your profits are. Your profit's $2,000 and you say, hey, I'm going to put 10% away, which means I'm going to put $200 into the savings account. Hey, this month I really didn't make anything. I don't really have to put any money away. The next month I make $5,000. So now I got to put $500, or you can set it and forget it, which is what some of you are doing, which is fantastic. You just set it up with your bank that automatically $500, $300, whatever, gets moved from one account into that savings account every single month like clockwork. But this only works if you keep a healthy amount inside of your business's checking account. For some of you, you guys keep a nice number in there. You have, 3 to 6 months worth of expenses for the business and you leave it in there. You don't touch it, which is what I highly recommend, by the way, is that you always have money in your business's main checking account for things that happen, especially if you have a payroll. You always want to keep money in there for your payroll. If you have a separate checking account for your payroll, great. Always keep money in there because you're going to have to make sure you take care of people. That's an expense that you have that you have to pay no matter what, right? So if you have money, then just set up an automatic withdrawal or transfer of the money every single month. It makes it nice and easy for you. You don't even have to think. Take what that average is. Look at what you owed last year. Make it a little bit higher. Divide it by 12. Move that every single month. Make it so that you don't even have to think if that's what the case is. But the important thing is that you have a plan. All right. Because once, like I said, a lot of times when I'm looking at these accounts and stuff like that, there might be one checking account for everything and nothing else. And one, I'm happy because there's no debt, right? I'm not having to deal with any of that. And not just me, but the business is being debt free, which is fantastic. But just get that little account on the side and just put that money aside for the taxes, because it's going to give you a couple different things. One, it's going to give you peace of mind that you're going to have the money. And I can tell you the thing that hurts the most and where it physically hurts you is because let's say you have $30,000 sitting in your checking account that you've built up for the business. And then you go get your taxes done and they tell you that you owe $8,000. And then all of a sudden, $8,000 comes off your 30 and your account tanks down to 22 and you feel it in your heart. It hurts. And the reason it hurts like that is because you forgot that it wasn't your money. It was the government's money all along and you left it in that account. But I promise you, if you had an account that was sitting at that 30 and a tax account with 10 in it, one, you're going to go, wow, look, I'm doing really good here in the business. And then when that 8 comes off the tax account, it hurts, but it doesn't hurt as bad because you knew mentally that that money was for the government. It was set aside for the very reason why it came out. And the main account is still sitting at that 30 and you still feel really good about it. So if you're one of those people that just are kind of flying by the seat of your pants and you're not really setting money aside to be able to pay your taxes, then I really encourage you to do that. Probably the most successful isn't really always the person who's got the highest sales, right? I always say sales is a vanity metrics. It's about, the profitability of the business and how much you keep, not necessarily how much you make. And some of the most profitable business owners at the end of the day, they didn't have a crazy amount, but you know what they did? They kept a nice, healthy amount inside their bank account. So they never had to worry. They pulled out what their business was generating for them as a business owner, and they had a savings account on the side that they started putting money in for their taxes. And you know what? They're the most calm people. And you would think that they would be the most stressed out because of, their business isn't super, $100,000, $200,000, $300,000, they're not running off those kinds of numbers. But they're in a good place. And the reason they're in a good place is they don't carry debt. They have a healthy checking account. They have a savings account for their taxes, and they're ready for anything to go. Don't get me wrong. They don't like paying taxes any more than you like paying taxes. But they had a plan. They executed the plan and they put the money over there. And this was a lesson even I learned the hard way. When I first left corporate America and I had to go out and take care of my taxes, for years, my taxes were taken care of. And then when all of a sudden I'm responsible for it, it hurts differently because when it's coming out over the course of 26 paychecks, it doesn't hurt as bad. It hurts, but it doesn't hurt as bad as when all of a sudden you're having to pull out $8,000, $9,000, $10,000 from your own money to pay this bill, or even broken down into the $2,000, $3,000 quarterly payments, whatever. But it's important that you realize this is the life of a business owner. This is the life that you've chosen. Therefore, you must act in a way that really sets you up for success when it comes to your taxes. Stop being surprised that you owe this money. Of course you owe this money. You're having good, clean numbers and bookkeeping, and you looking at your business numbers and looking at your profit and loss. When you look at the bottom and you're making a profit, I'm going to tell you right now, you owe taxes. There is no surprise when you're looking at it. There is no surprise as to how much you probably owe. Look at the bottom line. Just do a basic calculation. Figure out 10, 15%. Some of you, it might be 30%. Depends upon what that bottom line is. But for some of you, just start with 10, 15%, and at least you're more prepared today than you were yesterday. And that's kind of where everything kind of falls apart, is we're not prepared, we act surprised. And the reality is, if we're looking at our business numbers, we're doing bookkeeping, we're making sure we look at our profit and loss every single month, we know exactly where our business is trending and if it's profitable. And another thing you can do, even if you're not looking at that, if you're putting money in your pocket and you're being able to go off and pay for things in your personal life based off of this money you're putting in your pocket. If you're taking $2,000, $3,000, $4,000 out of your business every single month, you're probably going to pay taxes. Okay. If you burn through everything that you take in, one, you get a different problem because your business isn't profitable. That's a different situation. Those are probably the people that may not owe any taxes. But for the most of you, if you're putting money in your pocket and you're being able to go on with your life, the odds are you're going to pay taxes. And don't be surprised. have that money. Technically, you're supposed to pay that money in April. Even if you delay your taxes into October, you're supposed to pay the taxes in April. Otherwise, you have to pay penalties on that because you didn't pay it in April, even though you filed your taxes on time in October. I'm not a tax expert. See a tax expert for your particular situation. For some of you, you might have tons of depreciation that you're able to use and you don't have to come up with a lot of taxes. But at some point you will owe money and you want to build that muscle and start saving up that money. Do it slowly. Even if you don't think you're going to owe taxes for a couple of years, start putting that money away now, start building it now, and you're going to have a nice little egg set aside for taxes that you're going to be able to use and never have to stress over because you made it part of your muscle memory that you put that $300 every single month into that tax account, $500 every month, that 10%, that 20%, whatever it is for you. You've done it on a regular basis, okay? So quit screwing yourself over, okay? Whatever you do, it is important that you set up a tax account right now that you're able to put the money in. Whether it's sales tax, state tax, federal tax, you have a tax account that you just put money into that is holding the money that's for the taxes, okay? For whether it's the monthly taxes that you have to give back on the sales tax, for your quarterly taxes, for your annual taxes, you don't have to stress over it, okay? Just think of it as not your money. It's important when you look at it. You don't go, "Ooh, look at that. I got 10 grand. No, you don't have 10 grand. You have 10 grand set aside. That's not your money. And that's the best. You mentally get there. I promise you, it's going to be 10 times easier. You can't think of it as your money because it does hurt a lot more when they tell you you owe 8 grand. And if your account doesn't have 8 grand, you're freaking out because you got to come up with this 8 grand. It also hurts when your account has 20 grand in it and all of a sudden you pay an 8 grand out of it. You had the money, but it hurts because you just watched your account go from 20 grand down to 12. That hurts. Have the tax account. It hurts, but it hurts a lot less. And that's one of the things that you can do is to make that hurt just a little bit less. But more importantly, you were prepared for it, you were ready for it, and you did the smart business thing, which is you set aside the money for it and you were ready for when it hit. All right? We're later in the year. It's not too late to start. Start it now. I don't care when you're listening to this, when you're watching this, whatever the case may be, start being smart when it comes to your taxes. Be prepared. It's going to happen. It's not a matter of if, it will definitely happen. And you want to make sure that you're prepared and that you have a great savings muscle built up from your profits. Just look at the profits, put it over, pick an amount, do it every single month, take a percentage, put it over there every month, whatever the case may be, just have a plan. It's really important. I see it all of the time and I don't want you to be one of those people. All right, with that, I'm starting to rattle. I know it's time to get out of here. I'll see you next time. Bye for now.